This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The group of 7 countries and the European Union are in talks to replace a price cap on Russian oil exports with a full maritime services ban in a bid to reduce the oil revenue that helps finance Russia's war in Ukraine, 6 sources familiar with the matter said. Russia exports over a third of its oil in Western tankers, mostly to India and China, with the use of Western shipping services. The ban would end that trade, which is mostly done through the fleets of EU maritime countries including Greece, Cyprus and Malta. The other 2/3 of exported Russian oil goes out in a fleet of hundreds of tankers operating outside Western scrutiny and maritime standards, known as the dark or shadow fleet. Russia would need to expand that fleet if the G7 and the EU impose the maritime services ban.
Chinese independent refiners are buying discounted Iranian crude held in onshore storage tanks using newly issued import quota to swiftly raise their output, trade sources and analysts said, easing a supply glut. Stocks have built up in recent months after the refiners, known as teapots and mostly based in eastern Shandong province, ran out of import quota in October. Last week, Beijing issued in advance the first batch of crude oil import quota for 2026 of about 8 million tons. 58.4 million barrels, to 21 refiners, although one Chinese crude buyer said the volume is small enough that it would be exhausted by the end of this year.
Moving on to the top news in the energy sector.
Russia's ESPO blend crude oil cargoes loading in December traded at a discount of $5 to $6 a barrel to ICE Brent in Chinese ports, the weakest differential on record, 4 sources said on Friday. The discounts widened in China on falling demand after state refiners suspended buying because of recent Western sanctions, while private players have also become more cautious. ESPO blend oil cargoes had been placed at discounts of 50 cents to $1 a barrel below ICE Brent as recently as late October, traders said.
The EU will take a top-down approach to building a cross-border energy grid, as the bloc's Energy Commissioner Dan Jorgensen warned of billions lost from bottlenecks and failures to match supply with demand, the Financial Times reported on Saturday. Brussels will develop a plan to identify where investment is needed and will find projects to fill those gaps to push EU countries to better coordinate energy infrastructure across borders and sectors, the report added. Jorgensen told the Financial Times that the biggest danger to the bloc's decarbonization and energy security goals was the slow construction of its power grid. Next, we have the top news in metal markets. Gold prices rose on Friday as mounting expectations of a U.S. Federal Reserve rate cut next week buoyed sentiment, while silver soared to a record high. Spot gold was up 1% to $4,212.16 per ounce at 1:36 p.m. Eastern Time, 18:36 GMT, but was on track for a 0.4% weekly loss. U.S. gold futures for February delivery settled unchanged at $4,243 per ounce. The market is increasingly confident that the central bank is going to cut rates, and in response to that, we've seen the U.S. dollar weaken a little bit, and that's accretive for gold, said Bart Mellick, global head of commodity strategy at TD Securities.
Copper jumped to a record high on Friday after Citi lifted its price outlook for the metal, while a weak dollar also provided support ahead of an expected U.S. rate cut next week. Benchmark 3-month copper on the London Metal Exchange was up 1.7% at $11,635 per metric ton as of 17:36 GMT. The metal, widely used in power, construction and manufacturing, earlier rose as much as 2.2% to an all-time peak of $11,705. LME copper is on course to end the week up 3.9% and has gained more than 30% in 2025.
We will now look at the top news in the agricultural sector.
World food commodity prices fell for a third consecutive month in November, with all major staple foods except cereals showing a decline, the United Nations Food and Agriculture Organization said on Friday. The FAO Food Price Index, which tracks a basket of globally traded food commodities, averaged 125.1 points in November, down from a revised 126.6 in October and the lowest since January. The November average was also 2.1% below the year earlier level and 21.9% down from a peak in March 2022 following Russia's full-scale invasion of Ukraine, the FAO said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.